All right. What's up, traders? What's up, tycoons? Super excited for today's video. Natural gas price climbs toward 8-month highs. And, there's talk of people buying more energy shares that are not reflecting the recent moves in natural gas. And the natural gas futures cash prices find fresh footing as pressure persists on production. These are some of the headlines we're seeing. Natural gas has finally cracked that $3 level. Okay, we're going to go into a little bit of the news and some of the data surrounding natural gas in today's video. And we're also going to do a nice breakdown of the charts. Okay, so we have the weekly chart right here. In the last update, I basically said that things were looking promising. Okay, that I'm favoring the bullish the bullish count here versus the bearish count, but ultimately we're going to see how this plays out. I'm going to break down my thesis on those. That's a weekly time frame. Then we're going to look at the monthly time frame so you guys can get a good idea of some of the macro environment, right, of such a much longer term, and why we need to be cautious up here as we're testing getting very close to the highs of a supply zone. Right, we're also going to look at the 4-hour chart so you guys can see a little bit more intraday, all right, and get a cleaner breakdown and sense of what's going on. All right, we'll take a look at Boyle and the daily chart. Boyle is almost at $60, where I said in the last video I think that's where Boyle is trying to head. We're going to see if it can do that, why I was targeting $60. And then we'll also break down UNG, facing a very strong resistance level right here at 715. Above there, we have a gap to fill on UNG. So we'll see how things play out and, what the next move potentially could be for natural gas. Now, as always, the content provided on this channel is for informational and educational purposes and is not intended to be relied upon as legal, financial, or investment advice. So please be sure to read through the full disclaimer. I do want to mention I started a completely free newsletter. It's called Investment Intelligence. There's a link in the description as well as comment section. You guys can sign up for that. It's completely free, giving out free, valuable finance content as well as trade ideas. This was one on Tesla over a month ago. And you can see how that trade played out, and it turned out very nicely. This was also one on ExxonMobil. Okay, this one also over a month ago, and you see it went from 111 to 117, highlighting some of the conditions we were looking for on the RSI and MACD, which we got both of those. And not all of them are long ideas, right? There's even short ideas. This is SWK, Stanley Plecker, Black and Decker, highlighting the rising wedge, all right, and giving the targets of where we think it can go. That played out very nicely as well. So use the link in the description in the comment section to sign up for that. I also started a Ko-Fi page where if you guys are interested and you ever want to do a one-on-one personal session with me, you can book those directly through Ko-Fi. I do 30-minute and 1-hour sessions. You just have to come here, click on the commissions page, and that's also where you can come in and request a specific YouTube video. Okay, so there's too many videos and too many comments on there. It's hard to keep track. If you guys want to make a specific YouTube video request on the topic of your choice, you can do that directly through the Ko-Fi platform. Now, U.S. exports of natural gas set a record high in the first half of 2023. Now, the gross natural gas exports of the U.S. billion cubic feet per day. That's what we're looking at here. All right, and you can see, basically how things are going. All right, we have our monthly average in here. And things are looking extremely well, guys. The whole Russia-Ukraine situation really changed a lot of the global dynamics for natural gas, and the U.S. has come out of this a victor in terms of, LNG and exporting natural gas, especially in LNG, the liquefied natural gas. So, this is just something that, a lot of the bulls have been paying attention to. This has been a lot of their narrative when it comes into natural gas. Now, when you take a look at some of the news and the market movers, all right, European storage sites are reporting another hike in reserves to 96.3%. Fuel shipments from Norway, which we talked about Norway in the last video, which is the top gas supplier for the EU, are recovering and are set to hit the highest level since August once the last gas fields are fully back online. The most recent weather model shows substantial drop in temperatures by mid-October in Europe, which means that the current higher than normal temperatures aren't expected to last long. Meanwhile, in Australia, Chevron has reneged on the commitment it gave to the Fair Work Commission and could dent the current agreement in place in order to dissolve the strikes in Wheatstone and Gorgon LNG facilities. Union workers are set to reconvene on Thursday to discuss a possible restart of strikes. We also talked about Turkey in the last video, and Turkey's energy minister says he will travel to Israel in November to meet his counterpart in energy companies operating in the gas industry. They want to develop a framework with Israel when it comes to energy, and Turkey would buy natural gas from Israel for domestic use and would also send a fraction to the European market. And the EIA is going to be putting out, basically their weekly change, their weekly update on natural gas. So that's going to be coming very soon. I always like to take a look at that. Now let's get into the charts, right? A lot of you guys are here for the charts. And so there's two counts that we're tracking here, okay? In markets, they tend to move in 3-wave structures and 5-wave structures. So a 3-wave structure is going to be a correction, and you're going to see a continuation, of the trend, right? Now a 5-wave move is going to be typically your trend, right? And so, you can either have a bearish trend or a bullish trend. So, the bulls will tell you that we had an ABC down and that we're in our bottoming process. Okay. Remember, there's 3 stages to a reversal as well. There is, your downtrend, and then you have basically box consolidation, your consolidator period, and then you have your uptrend. Okay. And so it looks very clear to me that since we've been consolidating pretty much the entire year of 2023, we've pretty much gone sideways on the natural gas futures. We're really trying to potentially get that uptrend going right here. Okay. Now, the bears are going to tell you that this is 1, 2, 3 down, and that we're getting an A, B, C, D, E 4-wave count. And that would take us down here to wave 5, which would be at about $1.08. And so that's a really bearish thesis. But ultimately that is the bearish count. Right now, we're still squeezing in this triangle pattern right here. Okay, we haven't definitively broken out to the upside. It's very possible we can reject up here and try to break down. Okay, and break through the trend line and head down to 2.331. That's a possibility you do have to consider. But ultimately, I'm favoring that this was an ABC down, and now we're consolidating here sideways, trying to get the breakout. And if we can manage to stay above $3, okay, and really hold $3, this $3.50 to $4 range is really where I think natural gas prices can come and test. Okay, now we may not break through there, but I at least expect price action to be drawn towards those if we can do a good job of maintaining $3, right? And the reason being very simple: old support will become new resistance. And we haven't yet tested this level as resistance. So if we can get the breakout, I think price action will be drawn up here where there will be overhead supply. And we'll have to see how that works out. Now, speaking of overhead supply, when you zoom out and take a look at the monthly timeframes, okay, what we're seeing here is, we had this very strong demand zone, right? That we've respected for years. And as soon as we started coming back down into it, we barely even had any time to come into this zone because buyers and demand stepped in immediately every single time and always push price up higher. Now, the thing is that we are back in this overhead supply zone here. And so we need to be cautious. Okay. We haven't been able to break out of here or really consolidate sideways. Each monthly candle after we've come up into the zone, we've actually dipped back down lower out of that supply zone. So, you do need to be a little bit cautious, all right? From a monthly time frame perspective, if we can get a couple months of bullishness and get some more momentum, we might actually be able to get a bullish crossover here on the MACD. All right, that's something that we haven't seen really since 2020 when we had a bullish crossover here. And you can see how well natural gas performed after that. We had a bearish crossover here, and you can see how bad and how negatively natural gas performed after that. So, if we can get a couple more months of bullishness, right, and have a strong winter in the natural gas market, it's very possible we could get that crossover. So that's one thing we want to pay attention to. Now, when you zoom in and take a look at your 4-hour chart, we do have a slight bearish divergence at the moment. If you're not familiar with that term, just take a look here how we have a high, okay, and then we have a higher high. Well, on your RSI, this is your relative strength index. It's an indicator. It's a leading indicator, and it's going to give you the relative strength of a stock, of whatever it is that you're looking at, in this case the futures. And so we can see that we have a high there. We actually have a lower high there. So we do have a slight bearish divergence where RSI is making lower highs while price is making higher highs, and it's something we need to be cautious of. Okay, and the reason being is because, again, your RSI is what's known as a leading indicator versus your MACD, which is something known as a lagging indicator. So the MACD is going to tell you what's happened after it's already happened. And this is what we want to be cautious of and pay attention to and look out for, right? Here you can see a bearish crossover. White line crosses below the red line here. All right. If we were to come up and just take a look, that's right over here in this time period. Now, there was already a significant drop, and your leading indicator told you that there could potentially be a drop. We were very overbought on the RSI, and being that it's a leading indicator, it's telling you what could happen in the future, and it's saying that we could end up pulling back, right? And that's over here at this time period, saying it couldn't pull back. Then we do pull back, we start consolidating, and that's when we get the MACD crossover. So the MACD crossover happens, after we've already had the bearish move. It's a lagging indicator. And, once you start to combine your leading and your lagging indicators, it can help you have a little bit more insight into some of the future potential price action. Now, we did a really good job of finally, and this is the MCX futures right here. So this 239.7 level, we did a really good job of finally maintaining above this, right? It was an area that had been resistance for a very long time. We weren't able to get above there. And we finally did, and we're seeing the push higher. And I mentioned in the last video how we're looking for us to potentially test the upper range of this megaphone pattern, right? You have your trend line here, your trend line here, and that's what we were looking for, and really expecting. And we're heading up towards there, but we do need to be cautious because it's the top of the supply zone, and this is kind of uncharted territory that we haven't seen in a very long time. And so we just need to be cautious of new money longs trying to go long necessarily right now may not be the best risk to reward setup, versus if you went long once we held above that 239.7 level, or if you were able to get in over here, over here, over here. You can see we're clearly making a trend, all right? And the trend is very clear and defined. We have a low here, we have a higher low here, higher low here. And so if we were to pull back some, right, and let's say we were to pull back a little bit, we'd look to maintain that trend and put in another higher low. Okay, so that's what we're going to look and see if we can continue to do. Again, this trend goes back a long time. We've been consistently putting in these higher lows. We're consistently putting in a high, a higher high, and a higher high here again. So we'll just have to monitor how things are. The trend is bullish in natural gas futures, but the charts like BOIL and UNG tend to look a little bit different, okay? And the reason being is because there's lots of decay and, different things like that associated with them, such as contango, volatility decay, especially being a leverage ETF, but also being a commodities futures-based ETF. Now, I have a complete video. You can look it up, ZachlyTrades, BOIL decay, UNG decay. It's a really, really good video that goes into high detail explaining all of those things. So if you're ever curious as to why BOIL may not be moving the same as, the futures look how they're performing, that video will explain a lot of the reason why, and go over some of the conditions that you need in your favor, to be playing these things to the right side. Now, BOIL, as we mentioned, it had a trend line here and it finally broke through, right? We tested it here, here, here. We got a false breakout here, tested it again here, and then we finally break out and we came and retested that trend line here again, and now we're starting to see the movement up higher. Now, one of the reasons that we were looking for a move higher was not just the trend line. These blue boxes are what's known as gaps. Okay, so there was a gap down here on BOIL to fill. When BOIL was up here, even when BOIL was over here, I was warning about, this gap down, as well as this one. And, I said basically, once we get below 61.19 and flip that to resistance from support, and basically we're going to come down here and fill this gap right around $51 on BOIL. And once we did that, these gaps can also act as areas of support and resistance. And so we found some support there, started putting in a base, broke through our trend line, and we had one gap up here to fill, and we have another gap up here to fill. So this gap, all right, the gap right above us will take BOIL to about $60 a share. We're going to see if we can get continued momentum, continued, push up higher here and fill that $60 gap. Another reason that I think that, price action can be drawn towards there, besides just a gap, is, you have your three major retracement levels right here. You have the 38.2, 50%, and 61.8. These are the three most common and well-respected Fibonacci retracements. And you can see from our swing high to our swing low, we have this very strong downtrend, and it would make a lot of sense for us to at least put in a 38.2% retracement up to the $61 price level, also nearby that gap that, tends to fill about 90% of the time. The big question with these gaps is, when do they fill, right? Now you can see here resistance, here resistance. It's possible it could act as resistance and we could try to head back down. So you do want to keep that in mind, especially when some of the things we talked about on the futures chart, we have a slight bearish divergence. So there's a few risks associated at these levels, all right? And you want to be aware of those risks, especially if you're trying to go long here currently at the moment. All right, so that's basically the main level, the main target that I'm paying attention to right now. And if we can hit there, by the time we hit there, or even if we don't, I'll be doing another natural gas video update because I do these every single week. So if you enjoy this video and you enjoy natural gas content, this is definitely a good channel to subscribe to. Now, I mentioned divergences before. I just want to highlight them again, and I've already highlighted them on the chart, but take a look how we have a low here, we have a lower low here. Well, in this case, we're actually getting a bullish divergence on the RSI where we get a low and then a higher low. And, these divergences offer really good trading opportunities, right? And you can see afterwards, natural gas has a nice move to the upside. Okay, and then what do? Well, we end up breaking through that uptrend, come here, put in a lower low again, and now we put in another higher low. So we're continuing to put higher lows here on the RSI as price continues to make lower lows. You can see that was a 16.89% move. If you're a perfect trader and caught the low and sold at the high, I don't advise anyone to think that they're a perfect trader, but what you can do is use some of these strategies to maybe, get a couple swing trades in, right? And, capture 2% of that move, 3% of that move, 4 or 5% of that move. Remember, when you can emulate a successful strategy, that's when it's going to compound and those gains are starting to compound, right? If you can get 2% 5 times, all right, that's a 10% win. Is a good way to look at that. And maybe if you can do that, get 10% a month, right? That's 120% returns on a year. Again, you're not going to be a perfect trader and always do that. But it's just something you want to think about, right? And then what do? We come in and put another lower low in while maintaining to put higher lows in here. And that results in a 26.8% rally. And then we come here, put in another lower low. All right. And that results in a 33.55% move after we continue to put in higher lows. So you can see that, we had this trend line here for a long time that we were respecting, and we started to break through it over in this region, right? So, when things were really choppy in through here, all right, you can see that the RSI actually broke that bullish divergence trend line, but now we're back above it, right? And so ultimately, what we're looking for is to see if we can get a sustained breakout, right? If we were to just draw this into a range, into a box on our RSI now, we want to see, can we sustain a breakout to the upside and get closer back to that overbought territory, right? I mean, where we are right now at 57, there's still lots of room to run to the upside for UNG before it gets technically overbought on that daily time frame. 715 is that major resistance level. If we can get above there, we have a gap up to fill. You can see, again, another really good example of these gaps filling. There was a gap here back in March, okay, and we ended up filling that gap exactly and then reversing over here in August. So, sometimes they fill very quickly. Sometimes they take months and months, sometimes even years for some of these gaps to fill. So I just always like to chart them up, set some alerts nearby. That way, if we do try to get a gap fill, whether it's up or down, I know that there's an opportunity there for me to, try and play that gap. Now, below 715, right? And let's say we're not able to maintain above 715, 667, 642, those are still some of the major levels, right? You can see, that they're pretty well respected over here, well respected throughout this area. When we do break through there, look at where we bounced right there at 642, 2 times in a row on these daily candles. So those are the major levels. If we do break below 642, 606 is going to be my next major level. And you can see price action kind of bouncing and finding support in through and around that area right there. So that's it for today's video. Hopefully you guys enjoyed it. If you did, smash that like button, subscribe to the channel for more. Don't forget to check out Ko-Fi, where you guys can come and reach me directly on Ko-Fi, and also sign up for that newsletter using the link in the description below.